It's got some exciting stuff. So it's been a little wild roller coaster. And so what can we expect for next week? Well, let's have a look. This is what we can expect for this week because this is how it's been. It's been crazy up down roller coaster ride. This Iran conflict, the Strait of Hormuz has really just been a wild ride. It's like Mr. Toad's Wild Ride at Disneyland, but it was
That's pretty
March Madness.
funny, Sean.
What's that?
Your graphic is pretty funny.
That's kind of how it feels. I mean, it's been erratic to say the least. Usually in the bond market, when we see a movement of over 10 to 15 basis points in one day, that's a big move. And well, today it's up 42 basis points. So a lot of movement. We were at 5.99. We got all the way up to 6.75. Will we hold? Will we get to 7? It's all going to be really relying on what happens with Iran. So there's been a lot of really hard lines in the sand that have been drawn this week. So we're going to see what really happens between the US and Iran with the Strait of Hormuz. It's going to be really interesting to see. But right now, the markets, I'm going to show you real fast. This is the live market as far as what's happening in the bond market. We bounced. This was Friday. We had a pretty bad day on Thursday. We came all the way down here. Look at that, just this cliff that we jumped off over the last 5 weeks. Friday, this was Thursday. We started and we went all the way down below here. On Friday, we picked up steam. We came up a little bit. We bounced off this Fibonacci level, but today we opened above it, and now we're racing high towards this next Fibonacci level. If you look at the 10-year, this is where I'm getting kind of excited. Um, we started up here and we went kind of, let me just zoom in a little bit real fast. We started up here today and we are ending, we're right below this Fibonacci level. Let me tell you why that's important. If we can end the trading day with the 10-year below this 4.33, we've got a lot of room to fall. So these are levels of resistance. So when we pierce through these, it's almost like pushing through a barrier, and now gravity will most likely pull us towards the next level of resistance, which right here is the 200-day moving average. So if we can get the 10-year to drop down to 4.199 or 4.19 down here compared to the 4.33 that we're at right now, that will be a tremendous win. So really look at that. We're up 44 basis points. So just since we've been on here, a couple basis points here, but we really need to see the 10-year drop below and end the day below 11 basis points or lower 11 basis points. That would be a huge, huge help. So this Iran conflict is really kind of messing up the markets, but hopefully we'll rebound and we'll see us move forward. Now, there's been a lot of talk about hiking interest rates this last couple weeks. Last week, it was all over the news. Would we hike interest rates? And it was a lot of clickbait, but consumer sentiment came out today. It was pretty bad. A lot of low rankings there. And with that becomes the mentality of not spending money. So when you stop spending money or you slow down your driving habits because of high prices of gas, excuse me. Sorry, my allergies are kicking my booty. When we have people slowing down their role as far as spending money and driving, it becomes actually deflationary. I'm so sorry. Gosh, love it when you start sneezing on live Zoom calls. But deflationary oil would mean that potentially we could see inflation come down because of the slowdown in demand and the slowdown of the economy and the credit tightening. So it sounds counterproductive to say this, but at first it's inflationary because the cost of everything goes up with oil. But then if people stop spending and this ends and they slow down their consumption of oil, it could become deflationary. So that could bring rates down in the near future if this continues. And I'm so sorry, my allergies are just terrible today. But for those allergy sufferers, I'm with you. I hear you. It's terrible. But now we're up 45 basis points now, so it keeps climbing. So that's a good thing. So let's hope this continues, because it's we need to get back to where we were. If we can be back up here in the where the Fannie Mae 30-year was at 101.61, that's where rates were at their 5.99 mark. We went all the way down on this, and when the mortgage-backed securities lose their value, mortgage rates go up. So this last couple of days has been good. Will it last? That is the key. A lot of people are predicting rates in the sevens. I don't think we'll get there. I really hope and pray that we can have this Iran conflict come to an end. I guess up to 20 boats have gone through the Strait of Hormuz so far. That's a really good sign. So hopefully that will lead to lower oil prices, and we'll continue to see this rebound back to where rates were in the fives, which we all hope happens for our buyers and for our homeowners that we've helped to potentially refinance as well. So here's the 10 years been erratic. We've been up, down, up, down. If we can pierce below this, it'll be a really, really good day. Um, so as far as the trend, we're below it right now. So the trend line, if you can draw a line for the 10-year, it was above this line. We're below it today, and we're pushing down underneath this Fibonacci level. So we're in a good position. I'm kind of excited about it because it's been bad news for the last several weeks. Right now, we're in the mid sixes on a traditional 30-year fixed. Again, this is for the perfect borrower. If it's a jumbo loan, it's going to be higher. If it's a adjustable rate mortgage, you're looking lower. 15-year is a little bit better as well. And then FHA and VA are usually about a half better than a traditional 30-year fixed on the Fannie Mae side. So that's kind of where we're at. I mean, we were down in the fives across the board 4 weeks ago. So we're not a tremendous distance from where we were, but the psychology of the buyer, it always impacts them mentally when they see rates going up, because let's just face it, higher rates equals higher payments, and it's just not fun when we see that. So what's happening this week? Well, Fed Chair Powell was talking today in Harvard and kind of going over his stance on things, and that he's not perfect and nobody is perfect and they're doing the best they can. I think they could have done better in the last several years, but it is what it is. We have the Case-Shiller home prices coming out. Consumer confidence is going to be coming out tomorrow as well. And then we have JOLTS, job openings, coming out tomorrow. So we're going to see how that is. Low job openings could mean a more rebounding in the bond market, because bad jobs numbers are good for mortgage rates. We have an ADP payroll change on Wednesday, and manufacturing numbers coming out, and some sales for autos coming out late in the day as well. On Thursday, the Challenger job cuts and initial jobless claims are coming out. The the unemployment on Friday is supposed to come out the same as where it's at today. The estimate is about 40,000 new jobs being created. So not great, but not negative. But we'll see how that really pans out. So some important jobs numbers coming out this week. Hopefully they'll be bond friendly, and we will move towards lower rates in the near future. Now, that's our rate update. I'm going to talk about some FHA loans real fast, because there's a lot of misnomers about FHA. And if you, as a seller, if you're willing to accept an FHA buyer, I'm going to go over this real fast. And here I'm going to go over why FHA loans should be loved, why you should love FHA loans, because the biggest unused superpower of FHA is the FHA 203K. Now, this is a rehab loan, and there's two phases to it. There is a streamlined refinance, and there are streamlined FHA 203K and a full 203K. The streamlined 203K is a much faster, much more simplified, really available to do those odds and ends jobs, and it's easy to do and it's quick. The full-blown 203K is more like this. You've got a house that's fallen apart, and we turn it into something beautiful. We can do that with an FHA loan. So we can do little things, we can do big things. So if you've got a gross property, or if you have something out there that your buyers want to make an offer on that you say there's no way as an FHA buyer the appraisal is going to stand out. There's no way the appraisal is going to come in. The inspection is going to be horrible. We cannot do you're an FHA buyer. You can't buy that house. That is not true. The 203K streamline is fantastic for that. It's quick. When I say quick, only 30 to 60 days. If you have a streamline, minor items, and then the standard full 203K, that can take some time. But up to 75,000 in upgrades on the limited. And we can't do structural work. It's all mainly cosmetic. If there's a pool that's broken, if there's doors that are broken, if there's a roof that needs to be replaced, all of that can be done with the 203K limited, the streamline. If you need major construction done, the 203K full is where you want to be. But don't discount an ugly property because your borrower's an FHA buyer. We can still do it. And as a listing agent, if you have a property that's ugly, don't remove FHA as an option. Add FHA 203K to your finance options because it could open up a whole entire pool of buyers. Because here's what we can be done. Kitchen and bath remodels, roof gutters, HVAC, plumbing, electrical upgrades, flooring, painting. You can make it energy efficient. There's all kinds of things we can do. Make it accessible for the disabled. A lot of options, guys. So if you have a property that you don't think an FHA buyer could buy it, think again. It's a really good way of sprucing up your home for selling, because this could be a refinance as well, or to get your buyers into a property and have a good equity position and rehab it as part of the process. So there's some things that can't do. We can't put in a brand new swimming pool. You can't do like luxury items like a hot tub or a sauna or a fireplace or pizza ovens or anything built-ins. You can't do non-permanent structures in the back as well. Some people are trying to do ADUs. It's really not the program for that, but there are a lot of positives on it. So if you have an FHA buyer, use this as a tool on those properties that may not look perfect, because it is an avenue to get to the finish line, and your buyers will be phenomenally impressed with your skills and knowledge of what they can do on these older, grosser properties. So keep that in mind. And remember, the cost of all of this is rolled into the loan, and the buyers only have to bring in 3.5% of the future value. So it's a really, really cool loan product. So don't forget about it, because FHA can be a friend, and it's not just meant for people that are lower in credit. There's some really great tools. And conventional has a loan like this as well, called the Home Style. But FHA has some fantastic tools on it. So any questions on that program or anything else that's happening in the market right now? You guys have any questions? What about roof? Yes, the roof can be put into an FHA 203K. Absolutely.
So if you could give us send out like a flyer for that, that would be
Sure.
awesome. And then also I really need a flyer on your bridge loan um,
Yes.
options, because I have a client who is that would be perfect for them for
Okay.
her, but she's really concerned about the costs. So I
Yes,
know you have different products, so
we
send her
do.
over.
So
All right.
I'll go over that real quick. The bridge loans, the typical bridge loan is you take money out of one and they pay off the whole mortgage, and the fees on that are high. And then we take that money and put it towards the new purchase. And we do a new loan over there as well. And then when that house sells, this one goes away. Um, we have one where we do a home equity line on one, and then that's usually free. And then we don't count any of the payments of this house over here. And then we do a normal purchase over here using the home equity line as a down payment. And we only count the new mortgage against them when qualifying. So that's our in-house product. I'll send you some information on it. It can be a little um, technical. So if you have any questions on it, I'm happy to talk to any buyers that you have for it, but I'll get you a flyer on that and the 203K. So you have that in your quiver of tools to use for your buyers.
Thank you. Thank you. I need them both.
You got it. Any other questions on what's happening with the market? Looks like we're down only or up only 38 basis points now. So we lost a little ground, but we're still up a lot. So that's good. All right. Well, enjoy your week. I'll be here all week, not going anywhere. I'm working 24 hours a day, as always. So if you need me, I'm after hours, weekends, you name it, I'm here. Have a great one, guys. Have a good week.
You're
Talk to you
you're
soon.
awesome. Thank you, Sean.
You're very welcome.